Entity ABC, they are clarifying, as a lessee, enters into a 3-year lease of equipment. Entity ABC agrees to make the following annual payments at the end of each year. So 20,000, 30,000, 50,000 will be paying at the end of the year. For simplicity purposes, there are no other elements to the lease payments like purchase options and lease incentives from the lessor or the initial direct costs. So only one item is there, and that is the lease payments. Assume a discount rate of 12%, which is entity ABC's incremental borrowing rate, because the rate implicit in the lease cannot be cannot be readily determined. Okay, so 12% will become our discount rate. So these we will discount at 12%. That will give us the measurement of the initial lease liability. Entity ABC depreciates the ROU asset on a straight line basis over the lease term. How would entity ABC account for the said lease under Ind AS 116? So the first thing that we really do is we carry out the measurement of the initial lease liability. 20,000, 30,000 and 50,000, that is what is to be discounted. So we say measurement of initial lease liability. Here, lease payments. Discount rate this time is 12%. We will be paying the lease rent at the end of each year. 20,000, 30,000 and 50,000. Right, I have the question with me, 20, 30 and 50. Okay. Present value factors. %. Carry out the discounting. Take the total. $77,370. So lease liability will be incorporated at $77,370. If you are still writing, just pause the video here. Now that we have the lease liability, we say next, measurement of ROU asset. See, no other information is given. We know that the cost of the ROU asset will include present value of the lease liability. To that, we should add any payments that we are making to the lessor. From that, we should be deducting the incentives from the lessor. To that, we should be adding the initial direct cost, and we should also be adding any present value, or we can say initial estimate of the restoration cost. No information is given, so only one item will become a part of the cost of the ROU asset, and it is the present value of the lease payments. That's nothing but the initial lease liability. In simpler words, ROU asset should also be recorded at 77,370. So ROU asset is also recorded at rupees 77,370 in absence of any other element, right? No other elements are given, so we will record the ROU asset at 77,370. We are planning to depreciate this asset on a straight line basis. So we can say depreciation per annum will be equal to 77,370 minus 0, and the lease term is 3 years. So 77,370 divided by 3. So my depreciation will turn out to be 25,790. So this will be for the ROU asset. If you're still writing, just pause the video here and complete. What more? This lease liability will be recorded in our books as if we have taken a loan from the lessor. And if you have taken a loan from the lessor, then you will have to pay interest. We will provide a full-fledged accounting in this particular question so that it becomes crystal clear to you that how exactly the entire accounting will be carried out. So initial lease liability has been already recorded. We will now consider how much interest we are going to pay in the same. So we say, we prepare what we will refer as a loan repayment schedule. So we say, or we can say a lease liability repayment schedule. Lease liability repayment schedule. We say here amount at beginning, interest expense at 12%, total dues. You can skip this column of total dues if you wish. I have prepared it, but with practice you can avoid it. Lease payment, and then amount at the end. We shall be preparing this for 3 years. We will start with 77,370. Lease payments we already know, 20,000, 30,000 and 50,000. If you are still writing till here, just pause the video here. So 77,370, I'm multiplying that by 12%. So I get 9284. Total it is now 86,654. From that I deduct 20,000. So 66,654. Take again 12%. 7,998. Add it up. 74,652. Deduct 30,000. 44,652. Be careful in the last year. Say in the terminal year, the total dues should become 50,000 so that the lease liability is fully paid. So I'll take a balancing figure here, 44,652 and 50,000. So I get that as 5348. I will say this is the balancing figure. If you are still writing, just pause the video here and complete. So based on this, we will be able to prepare our journal now. Okay. We'll say journal interests, particulars, exact dates are not given. So I say beginning of first year. Then we say end of year. End of year. One, two, and three. Right. We say here on commencement of lease. On commencement of lease. Tell me, what will be our first accounting entry on the commencement of the lease? We will incorporate the ROU asset and we shall also be incorporating the lease liability. So we say ROU asset account debit to lease liability account. Yes. How much was it? 77,370, isn't it? So 77,370. So this is our first accounting entry. For the lease liability, there shall be interest expense. So we say for interest expense, our accounting entry here will be interest expense account debit to lease liability account. Interest expense account debit to lease liability account. We will incorporate over here the interest that we have already calculated. See, these are your interest expenses. So with these amounts, we will record the accounting entry. So it is 9284. I'll just put it down. 9284, 7998 and 5348. So for interest expense, we say the amounts, start putting those amounts. 9284, 7998 and 5348. We are also going to provide depreciation. So for depreciation, depreciation account debit to ROU asset account. We have calculated the depreciation 25,790. record for the depreciation. $25,790. It is straight line method, so every year the depreciation will turn out to be the same. Then for lease payment, right, we have agreed to pay 20,000, 30,000, 50,000. So an accounting entry for the same. These payments will reduce our lease liability. So lease liability account debit to bank account. First year we are paying 20,000. Second year 30,000. Third year 50,000. Finally, at the end of the third year, what will happen is your ROU asset will be fully depreciated, so it will be removed from your balance sheet, and your lease liability will be fully repaid, so that will also be removed from your balance sheet. And of course, the interest expense and the depreciation should be debited to the profit and loss account each year. For that, we will put simply a note. Okay, we will not record an accounting entry because this is not the only amount of interest expense that you will have. This is not the only amount of depreciation that you have. So the total interest that you are incurring throughout the year and the total depreciation that you are going to charge across all the assets that you have, everything will be accumulated and charged to revenue. So that's the reason I am not recording a separate accounting entry for the same. But we have to keep it in mind that these two expenses will be ultimately recognized as an expense. So we say as a note at the end, we say interest expense and depreciation shall be charged to revenue, at the end of each year. At the end of each year. So we are getting a full idea of counting this time, isn't it? Let's see, stepwise, understand. The first thing that I will do is I will measure my initial lease liability. Because there are no other elements, the lease liability and the ROU asset initially turns out to be the same. We are charging depreciation over the lease term. So I calculate the amount of the depreciation. Yes, this is important. Lease liability, we are going to repay, and if you are repaying, then there shall be interest expense. So I have prepared a loan repayment schedule. Here we are calling it as a lease liability repayment schedule, and we are calculating what is the amount of interest expense for each of the years. And then what we have done is we have provided the journal. Yes, if any portion of the journal is pending, you can pause the video and complete it. The first one, it will be for commencement of the lease. Yes, if anything is pending over here, you can just pause the video here and complete it. Interest expense and depreciation, that's it over here. Interest expense and depreciation. Pause the video here if it is incomplete. And finally, the lease payments that we are going to make. That's the end of the solution.